Hey guys, how are you? Vladimir here. This is the live trading room. Well, not live, but the trading room idea because I couldn't record live event today. I was in a meeting and I wasn't sure when I'll come back. So I couldn't really schedule a specific hour. Sorry for that. But this is our video preparation for trading for Monday and setting for the following week. So what do we have for this coming week? Fundamentally, this is actually a pretty busy week. It starts, well, let's refresh it because we had already some important news. And here you go. This is what we expect. The main event, it starts for today with the speech from Carney. Some news from the US, which so far came mixed. And then we are warming up with the PMI manufacturing in Switzerland, in China, the business confidence in New Zealand, and it's warming up. GDP in Canada tomorrow, consumer confidence in the US, speech from Governor Bolos tomorrow in Canada, unemployment rate and employment change in New Zealand, then day off in Europe, but FOMC statement and the funds rate in the US. Follow up with the press conference, of course. Vaccine manufacturing PMI in China, and then the inflation report in Britain, following with the votes for the bank rate and the bank rate itself, which is not expected to be changed. 0.25% is still the expectation. And then we are to Friday, where we have the non-farm payroll event. So pretty busy week. By saying that, we have to remember how these weeks could be sensitive and act accordingly. Trade with clear setups where the risk reward is clearly in your favor. And if it's not clear, wait. As simple as that. So let's begin. What do we have? Let's start with the European pairs. And the euro dollar will be our first one. But before we do that, for all those of you who are watching the video, in that case not live again, but the live trading room idea video, the live analysis and the trading preparation, first of all, welcome to our family. I would suggest that inside the members area you would go over the video tour so you understand how the members area works and what it suggests to you. I would definitely recommend, this is trading report. Watch how to use the trading report. What you can find here is the list of the most important webinars to understand what we are doing and how. All the techniques we are applying and using, so you understand what we explain in the live room clearly. Watch list is the summary of the pair and time frames as we watch them. You just click on the image, it opens the image for you. Okay, so this is what you do. Okay, then on the bottom, on the comments, you would see that separated by sections, basically explaining each time frame. What do we have there? Please note, this is a summary to the live room. It's not a replacement. So based on your availability, make sure to watch the live rooms or at least highlights. So let's begin. The euro dollar, after invalidating the previous low, oops, let's change the colors here. Here, after invalidating this scenario, this is what we had for our chart. Here, that's what we've had, right? 1, 2, 3, 3 higher highs, 3 higher lows, and one straight pullback through all the Fibonacci levels. Invalidated the bullish plan here. Then by breaking this trend line and the low, it went down bearish again. The idea is bearish, but personally I think the bullish run is coming on the next several weeks. Why? This is a double cycle from the weekly. This is a critical level. So yep, as for now it's still bearish. No reversals signs to the upside, but the level here becomes critical. We have to remember that. And this divergence would become active sooner or later, and we will see the bullish fight. Now, the weekly did not yet create a bullish divergence. Daily does not create a turnaround. What is a turnaround? False breakout and higher highs. We don't have that yet nowhere. We also don't have the alternative, which is the higher highs, higher lows, not daily and not yet the 4-hour chart. Therefore, the current rally is treated as a correction, and with the next signs like bearish hidden divergence, the expectations are for bearish continuation. Sorry for the white screen. Now on the 1-hour chart, we can clearly see it's building up here this sort of a structure, right? It should fit in with the 4-hour chart divergence. 1-hour chart would create its own divergence. It could be this one or the next one to be developed. Both would be completely okay, and from there we will start looking for the sells. This is our plan for the euro dollar, bearish on the short term, as long as we do not have the turn around signs, as mentioned before, false breaks and higher highs, or triple highs, triple lows going to the upside. Next one on the list, euro versus the pound. Our long-term plan here was and remains bearish. Why? We are trading, let's remove this. We are trading here, triple cycle from the weekly. Let me just draw it for you guys. Here. Triple cycle from the weekly, bearish divergence, the expectations for 2 waves correction or a range. Both scenarios would be completely acceptable. Since there is no bullish divergence currently on none of the lows, here, no divergence nowhere, our follow-up is for sells. So for that, daily must fit in. Daily is still holding the range, which is acceptable after the double cycle. This is a corrective cycle. And that could be holding the range or going for a bit deeper, attempt for a rally. Both scenarios are totally acceptable. We are after sells here. To validate that, 4-hour chart has to break if it's the daily range, so the 4-hour to be cycled by itself. This is the 4-hour chart cycle. It has to break its trend line. And aggressively, previous week we had already some going trend here, right? False breakout here, lower lows, little rallies, and sell. This is still valid as long as this top holds. This is still valid. This could develop a bearish hidden divergence and continuation. Whatever the case is, the idea for us is sells. As long as this top holds, good, it could be applicable for short term. If this top doesn't hold, then we are going for the second leg from the daily, right? It will be like 1, 2, and then a sell. This or other way around, the plan for us, look for sell setups. So the idea here is bearish. Now if we take a look on the SPT, SPT is our free strategy available for Traders Academy Club members. You can download it from members area. We can take a look here on the scan that right now it switches bullish, right, as per the scan. But take a look what happens here. Euro pound, sorry. Here, right? If this holds here, let's draw it so you understand my view here. Triple cycle, right? If this holds here, then it will become the top, the hold. And as long as this 4-hour chart top holds, double cycle here would provide 3+2. So developing wave down, corrective cycle, and possible sell continuation. In that case, the cloud again very likely would turn bearish, and this would turn to be red again. So follow up for a setup. As for now, you can see no setup, but if the scenario described for triple double, this will be clearer. Like this, triple double would validate itself. This is definitely a good place to start looking for the sells, and it would fit very likely inside the SPT. So have that on the follow-up, and that could happen within a day or two. So this is why it's very important to keep an eye. Euro OZ, our long-term sales. Let's take a look on this one. What do we have here? So this is what we are trading. a reminder, right? Triple cycle. We are after double wave correction. As always, so for weekly to work, daily must fit in. Daily was a corrective cycle. Still is. Still inside this range. Last divergence became bullish. Bad drawing. This is what we refer to, of course. And the idea here is now we are facing a corrective cycle. That could be two waves or a range. So we could still face this. We could still work inside this range. Both scenarios are totally acceptable. To enjoy that, long-term plan is bearish, and this is what should remain from it. So looking for rallies followed by sell setups. Now this became a bearish hidden divergence. Sorry, this. And if this is bearish hidden divergence, 4 hour to be corrective cycle and divergence by itself, and it's not yet, as you can see. And this is why 4 hour is totally acceptable to continue and play inside and within this range of prices yet. So the short term could be this, rallies definitely. That could also play inside the range. But short term pushes to the upside are totally acceptable. Personally, for me, I am after the weekly cycles, therefore I am looking to sell the rallies. I skip the short-term buys. I'm looking for the daily to fit in the weekly and sells. This is my personal looking for position. Euro Kiwi. Now this one is great for us so far. Now we are bullish here for the long term. This is the reminder why. Triple double. Bullish divergence. We are after buys. On the shorter view, daily was against us by making this little slowdown. Bollinger Band duplication. Kind of. Was this breakout rate? And basically this was the first, well, we assume this is the first leg from the daily. Correction and continuation, right? So if this is the first leg from the daily, 4 hour must be cycle, right? One leg from daily, 4 hour to be cycle. And 4 hour was a cycle. We had a beautiful run here. And basically, well, it's just a bit different drawing. Sorry, here. A bit different drawing due to the divergence, but the idea is there. And we are in corrective cycle. Corrective cycle could be two waves. Corrective cycle could be range. This or other way around, we are after buys. Bullish plan. So retraces to buy. I personally think we are going to see one more leg and then a rally. Will we? Only time will judge and tell. This is my personal expectation. I think it's going to happen. We will see what the market gives for us. Okay, so the Euro Kiwi is bullish. Short term, we were looking for this sell plan. It's not here. Here. We were. Is it here? Yep. This was the idea of ours. Right, looking for the sells. Short term around 169, 170, the critical Fibonacci levels. We got a sell from the market. Here we go. Now, as it goes, we should be looking for the buys according to the bigger cycle. That would be the best scenario. 3 plus 2 is always considered as the best scenario. Right? Bullish divergence here to develop. If it does, perfect buy. So follow up for long-term buys. And for all those of you who are involved in sells, with whatever the entry you did, don't forget, never let a winner turn a loser. Make sure you have your money in the pockets when you have signs against. Euro franc is the next one. Now, Euro franc also coming from the weekly, bullish divergence, our expectations upside. Daily had a beautiful shot to the upside, bend to bend movement in the Bollingers with 50% deviation, acceptable zone, top of the daily range, closer to 115. This is the place where we expected short-term correction, and we got it. Now, this is a cycle that the pair has for us, special cycle. So we are now in corrective mode. Corrective mode could be 1, 2, and buys. Corrective mode could be a range. Both scenarios would be acceptable for us looking for buy setups. Now this one should fit also in the SPT. According to the Euro franc here, the weekly and the 4-hour currently lined up. The daily is not. Let's take a look what it has for us here. Okay, so here is what we have. We are in a bullish cloud, making higher highs, higher lows. If this low holds, then the assumption is this range. We did have false break on the top. We have false break on the bottom. This could definitely hold as a range. So if we do have here a good setup with a bullish cloud and this holds as bullish scanner for trend scanner, this is a beautiful buy. If it doesn't and goes through without providing a good setup, then the assumption is the second leg in development, and then we are buying. This or other way around, we have the preparation for two scenarios which we are following for buys. One, to hold this low and then stay within acceptable range in correction, then little pullback and continuation. Two, if it goes through, then this is going to be second leg, and then the buys with a bullish divergence. Okay, two scenarios for us. Whichever of them happen, if happens, and I say if because we never, with all our wish, we never can know will that happen or not. We assume if it happens, we know what to do. If it doesn't happen, we know we abandon. As simple as that. So that's about the European pairs. Okay, Euro dollar, Euro pound, Euro Aussie, Euro Kiwi, and the Euro franc are among the most interesting ones. What's not included, personally not my favorite at that moment. Moving on, the next pairs on our list, the pound pairs, pound franc. Here we go. So first of all, the analysis, and then we talk about setups. So first of all, what do we have? For the long term, we are in triple double structure, meaning we are after buys. Right? Bullish divergence, bullish convergence, bullish expectation for the long term. For all those of you who are involved for the long term, no changes in our views. For those who aren't, what do we have on a daily? So assuming the weekly starts its rallies, this should be first leg, and then we expect continuation. How do we treat that? We need to break it into cycles. This is a triple descending cycle, and we are now in corrective mode. Corrective mode, as you know, is going normally in one of the two variations. Two waves or a range. For range, we do have to face two false breaks. We have false break on the top, false break on the bottom. So it completely can fit and stay inside this range, right? Like this, and then rally. Or it can turn around, make second leg, build some bullish divergence here, and fly. Both scenarios are completely acceptable for the long term, and this is how we treat it, and that means we are looking for the buy setups. So if we get the retraces, we are looking for the buys. That could be two waves and buys. That could be bullish hidden divergence. And buys, right? But this short-term management becomes much trickier, and of course requires every single time signs against making the management. As simple as that. Now this one fits also in the SPT, right? We have the swing points lined up for us, and this is what we have. So this is where we turned green on all, retrace down, last two candles that verify the breakout are right here, and as long as this one holds bullish and did not become gray, the assumption remains bullish. If this is gray, then the momentum is lost, which anyway looks weak as for now. You can see it's by the candles, right? It's pretty weak by itself. It doesn't really gain new structure. Well, this is what we have. It has for us two highs. We don't have a new structure of higher highs, higher lows yet. It's pretty slow anyway. So as it holds, and this is not gray, we are bullish. If it becomes gray, it's neutral and giving us the possibility of lower push before the rally. This or other way around, we are after looking for buy setups. Will every single short-term buy setup turn to be a long-term? No warranties for that. Could that happen any moment? The answer is 100% yes, because everything is lined up. And it's important to understand that. Why? Because we all want to wake up and see this. But will the market agree with us and do it? We never can know. And will that change if we have a drop here and then a fly? Will that change anything of the long term? Of course not. And that's why I say that it's very important to understand the big picture, not to be surprised by this or other behavior from the market on the short term. It's very, very important, because many traders, what they do is they think, oh, so bearish candle, now it's bearish. Bullish candle, now it's bullish. And so on and so on. Don't get too excited for them. Otherwise, you would find yourself fighting and chasing your position every single day. Not the idea. So pound franc for me remains bullish, looking for the buys with every good retrace and buy setups. Pound dollar is exactly the same for me, bullish, and here is why. The long term, we are trading this double cycle. Therefore, this is our zone for target for the very long term. Weekly, same story like the pound franc had for us this. Special cycle, it can be broken into triple as well. And then double, bullish divergence, bullish momentum since. So the assumption for us is this. Now, this has to be broken as a cycle, and it is. It does also have for us this scenario with bullish divergence. Now, let's talk about levels. So we put the attention here on the Fibonacci retraces. If this is the first leg, we are right bouncing from the 50. Amazing. 129, critical zone. Next critical area is the area of 127, 128, right here. So what do we need for the reversal? So first of all, the trendline breakout would be a good sign. Second, trend change. How does trend change? When we face false breakout and higher highs. Do we have it at that moment? No. What's the alternative? Triples, right? 3 higher highs, 3 higher lows. This is definition of bullish trend. If we face that, perfect. Then we assume the trend changed again to the upside, and we can talk about buy retraces. But as long as it didn't happen, the pair can easily push lower, make the false break, or push to the next target, which is slightly below 128. Okay, guys, very, very important to understand this logic. Daily trend line not broken yet. Here. No false breaks, no higher highs, and no trend line reversals for higher highs, higher lows. Didn't happen. So pound dollar is bullish for the long term and neutral in terms of entry opportunities for the long term. Could the short term be traded? Of course. If that makes a good setup, short could be traded. Just remember, because it's against the higher cycles, the risk should be low accordingly. As simple as that. Because based on the cycles and the higher time frame structures, the fly upside could happen any moment. That's why you want to limit yourself with the risk. Make sense? This is the approach here. So my personal view for the pound is bullish, looking for setups. And for the short term, yep, it could push slightly lower. I'm not going to trade it. I never trade against the higher time frame cycles and divergences. It doesn't mean it's bad. If the risk reward in your favor, it's good to take. Right? That's pretty much it. So that's from the pound. The next ones on the list, Australian pairs, and we have two of them, Aussie dollar and Aussie Kiwi. I'll start with the Aussie Kiwi, which is one of my favorites, as you know, on the last several weeks. So the Aussie Kiwi, what does it have for us? We are bullish. Why? Because of the special cycle from the monthly. My idea is only looking for the buys. We are currently in corrective mode, which means we could stay inside this range, or we could go for the double cycle. How exactly will that develop? No one can know, but as long as the last low holds, the assumption is for buys. Weekly fits in very nicely, making this double cycle, making this double cycle. Sorry, wrong button in my drawing pen here. Okay, so that's why we are after buys. The daily had for us first leg, which we assume is the first, now correction, and expecting the rallies to continue. If the daily is first leg, then the 4 hour has to be what? Cycle by itself to the upside. 4 hour had the structure of the cycle to the upside. Basically it goes to here, the divergence place, right? Kind of ascending scenario. And since then, a corrective mode could be two waves, 1, 2, or a range. Range it doesn't look like as for now, so definitely fits in the two waves correction. Now the ideal scenario would be if we face here another push, divergence, and we start to look for the buys. Few clearances on stop loss locations for those who enter early stop losses, the last lows here, here, here. It will be great to see it's clearing it and then preparing for the buys. Okay, in that case we mark a trend line and looking for bullish momentum above it. Next one is Aussie dollar. Now Aussie dollar, I'll start from the long term, even though it's less relevant now, but this is what I'm after, special. This is my long-term personal view. Currently the weekly does not yet fit in because it did not have a tick up in the new divergence. However, it's still holding this divergence. This is the last official divergence of the weekly. Therefore, the pressure is bullish. If that's the case, daily should fit in, and that's exactly where the problem comes. The daily does not fit in at that moment. After breaking the structure of the two waves, daily is still stuck inside some kind of consolidation, pattern, range, you name it. It doesn't change anything of the long term. The idea is bearish. Bullish, sorry. But the short term could be affected. Now, for the long term, going back in my word, sorry. For the long term, I do want to see my structure for turnaround, which is false breaks and higher highs, or higher highs, higher lows. As for now, do we have it on the daily? No. Do we have it on the 4 hour? No. Therefore, no preparations for long-term buys. And that means that after this breakout, the momentum currently remains bearish. So Aussie dollar could play downside yet and still. Looking on the 4 hour chart, making a bearish hidden divergence. It had 20 candles right of the Bollingers, as you can see. Now reaching the opposite of the band, right? Looking in terms of the corrective cycles, it's building up some kind of levels here. This is the critical zone for the Aussie dollar. 1, 2. This is where we would expect the short-term probabilities for move down continuation. This is for the short term. As soon as we turn around with the turning principles, false breaks and higher highs, convergence principle, right? Or trend principle, which is higher highs, higher lows, triple of them, we are changing for the buys again for the long term. Okay? So that's for the Aussies. None of them currently fits in the SPT, so that's why they don't appear there. Okay? Next ones, New Zealand in CAD and CAD franc, and then we go to the dollar pairs. Kiwi versus the CAD, long term, bearish, triple, double, false break, bearish divergence. The idea is sells for the long term. Short term, daily, two waves, bounce, bullish divergence, corrective cycle. Now the first attempt here of this cycle, of this possible return, failed with this convergence, but then we had another one, which in that case comes as a possible structure of 3 highs, 3 lows. So this is where it should fit, right? Daily divergence, 4 hour to be corrective, 1, 2 sells, or some kind of a range, which could be here as a little megaphone. Okay, definitely a possible scenario for us looking for the sells. Short-term rallies could continue. This could become a bullish hidden divergence that could push higher. No problem with that. 2 waves or top of the range. Consolidation, and we are after sells. Okay, and we have the CAD franc. Now what do we have on the CAD franc? Long term is bullish, but this is like very long term. No, definitely not for everyone. So that's what I personally expect. Weekly doesn't really have anything. It's purely inside consolidation. So no agreements or disagreements. Daily had for us 2 waves and bearish divergence, which is against the long term, and this is why we expected correction. Now if the daily is against and it has 2 leg cycle, this has to be cycled by itself on 1 lower time frame, in that case 4 hour chart. Checking the 4 hour chart, it was a cycle. So we are after corrective cycle. That could be 1, 2. That could be a range. We had a range, a false break on the top, false break on the bottom. This is a ranging pattern. Definitely a possible scenario before the future buys. So short term could correct lower and could make any of the 2 scenarios. Range would be acceptable, and then we are after buys, retraces. Or 1 more low, and then it's 2 waves with bullish divergence, would be dealing with the next buys. This, or other way around, we are after buys. It fits good in the SPT, has been beautiful so far. This was the 2 waves. We got a breakout here. So far so good. Low momentum, as you can see, no real momentum up, very slow, but still bullish. If this becomes gray, the scanner, we abandon that and we will be looking for the new momentum opportunities. So watch this out. It has a good scan, good trend, good everything. The question would be, is it going to be like holding in a range here and then retraces and continuation? Or is it going to become gray, make the second leg, and then we are after buys again? How exactly will that work? Too early to judge, too early to know. We are trading facts, not expectations. Facts are bullish. This is for the very short term, as this is a 1 hour chart, right? And the sensitivity is accordingly. If that goes gray, we go neutral. For the short term, of course. For long term, our picture remains clearer. Look to buy after it traces, right? Our plan for the from previous week was to look for possible retraces from this zone. We got that. This was our critical area. Got that. Game over. Switching that. Looking for the correction to end and provide us with the buy setups. That's all. That's pretty much all as for now. Dollar pairs. We have the dollar yen and dollar franc. So dollar yen, we are bearish. Previous week we were looking to see one more push. I expected 112.60, 112.70. It managed to reach close to 112.40. Good enough, of course. The next thing we wanted to see is bearish divergence, which we got. False break we got. Engulfing we got. It looks good. The Japanese holidays could affect the whole movement here. But as long as the top holds, we are bearish. 4 hour provided us with this convergence principle. False breakout. And then lower lows, lower lows. So my view is bearish. Sell plan. The only problem we face here is the non-farm payrolls week. Statistically, that's good week for the yen pairs. It doesn't mean it's 100% of the time. But it could be easily 2 waves on the 4 hour and one more push. Very acceptable scenario. So definitely remaining bearish at this moment, if that's what we will face, and bullish divergence to stop us, that it will make it triple double. In that case, we'll get out with the profits and say thank you. I would be neutral. Okay, so it definitely looks good, but we definitely need to remember the possibilities as they appear and the possible changing scenario if this becomes triple double and a bullish divergence appears against us. In that case, as I always say, never fight the market. Accept what it gives you, and if it gives you an action sign like get out from here, do that. And the next one is the dollar franc, which I am remaining bullish here. We have some bank zone area here. I believe we should visit 103, 104. So I'm bullish. I expect rallies. That's currently a little correction. It could be 2 waves. It could be some kind of consolidation and a breakout. It could be 2 waves. Everything is acceptable. My view remains bullish, looking for buys. I expect 103, 104, or at least close to that. This pair also fits in the SPT, the swing point trader. We have a beautiful scan. And we have a beautiful trend, cloud, and trend filters. So if we get the 2 waves, we are after buys with the breakout. If it's 1 wave here, then the 2 candles possible, right? The breakout of the 2 candles. According to SPT rules, you have that in the manual and the video inside the members area. So that's for the dollar franc. I'm looking for buys, remaining bullish in my view. Okay, now this is my forex view. Now the last one is the investment. This is the dollar versus the Israeli shekel. We were trading the upside here from 355 zone. right here. We are cashed out. The reason? Daily is now against. I personally still think we are going to this, and I might re-jump in the buys here later. We will see. But as for now, hidden divergence against, time to cash out. And that's what we did. Daily against, 4 hour against, with continuing divergence, game over, money in the pocket. For all those of you who didn't, then pay attention. I'm out. Okay? It was a good run. A bit more than 600 points. Beautiful profit. Game over. That's for the Forex. Now we have commodities. We have 3 of them. Gold, silver, oil. Gold. Tick the bullish divergence. Made a false breakout. Triple highs, triple low, triple higher highs, higher lows in terms of candles on the daily. 4 hour had a false break and a convergence. Also triple highs, triple lows going up. Gold is bullish. This is the invalidation. What to pay attention to? If suddenly we go one straight leg below 61.8. You know I don't love these scenarios. If it happens one straight leg through the 61.8, it's a warning sign. In that case, I always abandon part of my trade or full of the trade, but I never keep full exposure. One straight leg below all the Fibonacci levels means weakness from the direction we assume, from the buyers in that case. So we do want to see it holds or making some clear two waves in a hold, right? Then it makes it beautiful buys, of course. Same with silver, same story. The only difference between silver and gold, they both have bullish divergence for us, but silver, not as gold, did not yet provide higher highs. So it makes it much more aggressive than the gold itself, right? We can easily see it trying to spike through just for fake breakout and then flying to the upside. As long as the daily divergence holds and make it bullish, we are after the buys. That's pretty much it. Oil is bearish with this convergence idea. The expectations are to sell the rallies. Okay. Now we do need to pay attention to the 4 hour chart. Did not really provide this beautiful like special cycle, right? But even if the daily is just for correction, it still could give us two waves, or or to keep that as a possible ranging scenario. So yep, oil is bearish. This is the invalidation. Okay, sell the rallies is the plan, and that's pretty much it. So this is our full this is our full list for the beginning of the week, and it looks like the market has for us some interesting opportunities coming this week. Just remember, patience, 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 and validations. Go with the ones that are clear for you. Clear with the rules, yeah? Not just clear, oh, I believe it's going up or down. No, clear by the rules. You have it, you trade it. You don't have it, you wait. As simple as that. Very, 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 very important not to force. Well, it's always important, but definitely not in non-farm payrolls week. Definitely. The randomality in such weeks is bigger than in average. Okay? My personal preferred list, Euro Pound, actually all the Euro pairs, Euro Franc, Euro Kiwi, I love them a lot. Kiwi CAD, Aussie Kiwi, pound, dollar, pound, franc, gold, oil, dollar, franc. I love them. It doesn't mean I don't love the rest. I just love the ones I mentioned somehow better on the technical view. Okay, so that's pretty much it. We'll go work on the report and publish the report as well once ready. Tomorrow Jordan is with you guys, and I'll see you again on Wednesday. Thank you very much for watching. Again, sorry I couldn't do it live, but the most important thing, we're here together in the video, aware of our list and have it clear done for you. So thank you once again. I'll see you around, and a reminder, we're in Telegram groups available for you, so see you there. Bye for now.